Stock market rebound. Last month was the best January the market has seen really since the 90s. And what's that mean for investors and jobs and the economy? Dory, live right now in the newsroom where calls have been coming in all night for another one of our Answers team phone banks. Dory, how's it going up there?
Well, Greg, I can tell you the news up here is that there's a lot of talk happening behind me, a lot of answers being handed out for free to those who are calling in. Now, the number one more time is 381-4939. You do have until 7 o'clock to get your answers free here, but I want to check in right now with Ben Chukra with Wells Fargo Advisors. Ben, you're just telling me this is really the first moment you've been off the phone since 5 o'clock?
Absolutely. It's been very, very busy, so thank you for giving me a little bit of a break.
Well, sure, and thank you for giving those answers out. I guess, what are people asking you tonight so far?
I mean, people are really asking me about, since the stock market has picked up a little bit, what they should do with their investments, whether changes are necessary, and people have talked to me about the creep up in interest rates.
Okay, and we want to get back to what Greg was saying just a moment ago, the fact that this past January was the best one on record since 1994, obviously a huge deal given the recent years and the economic recession. I guess, what are you telling investors to do right now? Because it is sort of a cautious time.
Well, a cautious time is generally the best time to be an investor. We've gone through 12 years where the stock market has basically had zero return. The U.S. economy is doing well. It's not doing great, but it's improving. But compared to other economies around the world, the U.S. is doing extremely well. Our corporations are very, very cheap. And compared to other assets like bonds, U.S. stocks look extremely attractive and, in my opinion, far less risky than bonds right now.
Ben, interest rates, of course, we've been talking about for months and months now at these record lows. There's a lot of talk 2013 will be the year we see that finally change. Do you see that happening? And I guess what would be the effect if it does?
Well, I see it happening right now. On the 10-year Treasury alone in December, we're at 1.5%. As of today, we were over 2%. For people who are invested in bond funds, for every 1% rise in interest rates, they could suffer a 10% loss in their bond fund. So I believe there's extreme risk for investors who are invested in fixed income, especially bond funds that have maturities of over 10 years. So I think a lot of older investors should be looking exactly what they own right now, because I think they could be in risk of losing money that they think is very, very safe.
All right, Ben. Well, certainly lots to talk about. We're going to let you get back to the phones. I know you have a lot more answers to hand out. And if you still have your question, again, it can be on anything money related, mortgages, college education and loans, whatever it be, 381-4939. And they are here until 7 o'clock tonight. And Greg, I'm going to send it back down to you.